Hi, my name is Jonas and I am from Danier Accounting. In this video, I will explain how you can convert your sole proprietorship into an ApS. The main two reasons why clients usually want to convert a sole proprietorship into an ApS is, first of all, to obtain the protection that a limited liability company gives you. It means that if you have any problems with clients or suppliers, lawsuits, potential claims, etc., well, by having a limited liability company, your private economy is protected completely from the business. If you're a sole proprietor, everything is mixed and a lawsuit in the company could end up damaging your private economy. The second thing is the tax perspective by having a limited liability company, since a limited liability company only pay 22% in income tax in comparison to the sole proprietor that usually will pay far more. A sole proprietor also have an option to pay 22% by using a special tax scheme, but the sole proprietor would never get the protection that the limited liability company would give. Therefore, considering the tax motivation alone usually would not be correct, since you can still obtain 22% as a sole proprietor, but the limited liability is definitely something that is worth considering. You should be aware that not all companies can be run in a limited structure. So if you are, for instance, a consultant, you should start being sure that the type of business you have actually can be put inside a limited company. We've written a blog as well that you can find on a website that explains the dangers, if you can say, by having a limited company if you are considered the beneficiary and not the limited company. So I definitely recommend to have a look at that before you decide to put your consulting services inside a limited structure. So once you have decided to convert your sole proprietorship into an ApS, you basically have two different options. Option number one is what we call a tax-free conversion, which is not really tax-free, but it enables you to postpone the tax that is a result of making the conversion. The second option is a taxable conversion, where the tax that is a result of the conversion is due for payment now when you do the conversion. So why do we even talk about tax in relation to converting your sole proprietorship into an ApS? Well, the reason for that is that you have to compare the conversion with selling your sole proprietorship to the ApS, or in other words, selling your company to a person that's not really you. So when doing the conversion, the number one question is, what is the value of your company? And when you speak about the value of the company, there is different things. There is some things that we can touch and feel, that we can kind of like know the value of, or at least we can figure out what the value is. That could be equipment, could be machines, maybe a car, things like that. But then there is something that's quite difficult actually to valuate, and that is what we call goodwill. Goodwill is kind of like the goodwill of your clients, meaning that if you have a good revenue, you have many fixed clients, well, that has a value. And the value of those clients that you've acquired over the years, well, that will also be sold to the ApS. And very often, if the value, of course, is high on the goodwill, then it will result also in a high tax when you do the conversion. So the reason why a tax-free conversion is not really tax-free is that it enables you to make the conversion from a sole proprietorship to an ApS and then to postpone the tax that is a result of the conversion itself. So it's not really tax-free, you just get to postpone the tax from the conversion. When you make a taxable conversion, it means that any tax that is a result of making the conversion will be due for payment now, in opposition to the tax-free conversion, quote unquote, where you can postpone the tax from the conversion. So when should you choose a tax-free conversion over a taxable conversion? Well, if there is very little goodwill, or maybe zero in goodwill, then you might as well go ahead with a taxable conversion, because it will not really give you any tax liability. If you have high goodwill, then it would make good sense to consider making the tax-free conversion, since it will enable you to postpone the tax that is a result of making the conversion. So when you make a tax-free conversion, then you need an auditor to help you evaluating your company. So he will state how much the value is of your equipment and your machines, but also the liabilities like the debts you have to suppliers and to the tax office. The auditor also will assist you in putting a value on the goodwill. The cost for the auditor doing the tax-free conversion is typically somewhere around 5, 10, 15, or even 20,000. So you would need to go out and find a good quote for that. The price naturally will depend on the complexity of your business. So there is 5 different ways that you can put a value on the goodwill. Number 1 is that you use a tradition within your industry, if such exists. It's not every industry where you have that, but for instance, doctors and dentists, accountants and lawyers and so on, very often have some tradition on how they evaluate their clients. The second method to evaluate your goodwill is by using a set of guidelines that the tax office has made. If you look on our website on the blog, we've made an Excel sheet available for you where you can put in the information required, and then you'll actually see how the tax office looks at your goodwill. It's important to note here that should you calculate a goodwill to be, for instance, 0, or maybe even the goodwill is in minus, then you still have to look at it objectively and decide if it's really realistic that the goodwill can be set to 0, even when you use the tax office guidelines. The third option is that you figure out a way to calculate the value of the goodwill on your own. Maybe you already have some idea on how you evaluate your clients. What's important here is that you take quite a big risk doing so, because you don't really know if the tax office is going to accept the calculations you've made. So be careful if you decide to do that and make sure that it's well documented. The fourth option is that you can use an offer if you have a buyer on hand. The offer from a buyer that's not related, meaning that it's not family, it's not a friend, will usually be accepted by the tax office as a legitimate price for your business. The fifth option is to use a professional. It could be a business broker in your industry, or it could be another type of professional that's known to sell companies within your industry. If you can get an offer, if you can get a statement from that person, then you can use that as well to evaluate the goodwill and the value of your business. When you do the tax-free conversion, then it always goes into effect on the 1st of January. So it means that if you start on making a tax-free conversion anytime between the 1st of January to 30th of June, then either way it will go into effect from the 1st of January. So as I mentioned before, then the tax-free conversion is not really tax-free, but you get to postpone the tax that is a result of the conversion. You can postpone the tax for as long as you hang on to the shares in the new company. Once you sell the shares, then the tax from the conversion will be due for payment. You can do a taxable conversion anytime during the year. It's basically just selling your company, the sole proprietorship, to the ApS. You need to treat the sale of your sole proprietorship just like if you were selling to any other person. So it means that you will issue an invoice from the sole proprietorship for the things you're selling to the ApS. Machines, equipment, goodwill, and so on. When you make a tax-free conversion of your sole proprietorship to an ApS, then you need to include all the assets and all the liabilities. When you make a taxable conversion, then you can decide how many assets that you want to transfer to the ApS. So you don't need to include all the assets and all the liabilities, but you can decide that specific items is sold to the ApS. It could be the clients, so that would be your goodwill. It could be some selected items, computer, telephone, and so on. And then there might be some things that you want to keep yourself for private use, for instance. Thank you for watching this video about converting your sole proprietorship into an ApS. I hope you liked the video and found it valuable. If you want to read some more about accounting topics, company structures, maybe you have a company in Denmark, or maybe you're thinking about getting a company in Denmark, go to our website, danieraccounting.com. You can also contact us. You're welcome to call me directly on +45 26 27 7777. You can also email me your questions on jonas@danieraccounting.com. My name is Jonas. We are Danier Accounting. Thank you for watching.